I was coming across an interesting article. The article will be linked in the more information box, which is entitled Five Doomsday Scenarios for the U.S. Economy. And the article starts off by stating it's been a brutal summer for the economy. The housing sector, like a balloon batted in the air one last time by the government credit, resumed its inevitable fall. Economic growth slowed to a lead footed 1.6%, and job growth is even more anemic. Meanwhile, consumers are cranky. The trade gap is gapping. I thought it's an interesting article when you take a look at this because, well, heck, we got a brutal, brutal summer. It's like saying a tropical storm coming inland can be very brutal when a dozen or so trees fall, a couple roofs get destroyed, and well, that can be brutal or somewhat. However, what would it be like if a Category 4 comes in? So to say the summer is brutal, I really don't know where they are getting that from. After all, I thought they used the stock market to determine the economy, and well, since the summer started, the Dow is up 7 points. Well, that's pretty neutral, I guess. Anyway, the housing sector, like a balloon batted in the air, well, what can I say? This is the government credit. Yeah, like they have a whole bunch of extra money. So I guess either they are very, very rich and they're helping out while they enslave us to the dollar, or maybe they just create the money and once again enslave us to the dollar. The next article. Most signs point, or the next paragraph, most signs point to a slow and steady recovery. But what if the pessimists are right again? What if the United States isn't in the slow lane to recover, but rather on the precipice of another decline? A double dip. And like I said, casino. Well, I was going to say casino for the market, but after all, they don't call it that. But the stock market being the indicator for the economy, it would show like a double dip, another leg lower as a possibility. I don't know, but hey, I guess it could happen. However, the key word is if the pessimists are right, and they make it sound like it's a negative label, but in reality, if they're looking at the bad parts, then it would be correct. And I decided to take a look at the definition, and well, the Collins English Dictionary defines it as the tendency to expect the worst and see the worst in all things, which, well, that's not me. I do see the worst in things, but not in all. I mean, I can't see it all. I don't expect the worst, but sometimes I do because I look at reality. The second one, the doctrine of ultimate triumph over evil and good, or of evil over good, the doctrine that the world is corrupt. I have to think that's optimist to think that actually, because to me, pessimism is lies or falseness, and optimism is truth, and it does seem as if that's the case, and really seem. I just know that it is. And if you look at the dollar, as far as the system, is the doctrine of how we have our currency, is that evil over good? I'm just wondering. Anyway, we'll move on now to the five different key things they talk about. Number one, housing's mini bubble pops. Perhaps nothing poses as a big concern to the U.S. economy as its housing market. It's unclear how the government's efforts to stabilize the market through a buyer credit, ultra low mortgage rates, and mortgage modification programs will pan out. Did it just create another mini bubble that's beginning to pop now that the support has been withdrawn? An interesting segment again. And like I was saying about them trying to make the pessimists sound bad, it's the same thing in here. Ultra low mortgage rates, which quite frankly are much, much higher than the Fed's interest rate. However, I wonder if they don't realize if they that the money system of interest is the problem. Because I think a lot of people, a lot of analysts would think, "Wow, this is ultra low, 4.6%," and it actually makes them feel good. I really don't know, but I'd have to think that to be the case because I remember myself before I figured out what interest was all about and how the monetary system works that I would be really excited to see really low interest rates. At the time, of course, I didn't realize that it would crash the economy, but heck, anyway, I guess I didn't know much back then. And I still don't know much, but I know more. Number two, you break the economy. You, the American consumer, are reloading savings after a debt-fueled decade. But as any general will tell you, when an entire squad reloads at once, it leaves everybody vulnerable. It's the same with the economy. And it's funny saying it's us that are breaking the economy. I really think, and I've been thinking this for about a year now, that when the S hits the fan, if you will, I kind of wonder if they're going to say it's been the extremist, if you will, who are basically saying that it has been us who has destroyed the economy. But when I look at this, I see it as in, well, what would I be doing if I seen a house or I had access or I lived on a property with a house that was like 125 years? It's been renovated on a few occasions, but quite frankly, it's just useless anymore. So I break the house. Why? To rebuild a new one. So yes, I think that we will be breaking the economy. Why? To rebuild the new one. It's very old. It's been renovated on many occasions and it hurts many people. That's why I have an interest in the break of this current enslaved type of economy. That's my personal view, and I'll leave it at that. The third one, toxic assets return. If you closely follow the bank bailout, then you know it wasn't originally billed as simply throwing money at the banks. Instead, the Treasury intended to purchase the toxic assets from banks which were the source of investors' uncertainty concerning the bank's stabilization. But the Treasury couldn't figure out a way to do this quickly enough to make it effective. As a result, the banks were largely stuck with these bad assets. We just don't know how bad yet. And if you were closely following the bank bailout, they say, then we would know that it just wasn't as simple as throwing money. It pretty much is, actually, if you closely follow it. You would closely find out that the money was created virtually out of thin air, and that's pretty much the basics of it. Yes, there's a bunch of fancy mumbo jumbo that goes with it, and I'm not denying that. But yeah, it was. I'd have to say that it's it's not a helpful thing for the economy just to print money as they are. Number four, Europe finally, or Europe falls apart. I don't know why I said finally. Anyway, Europe seems to have avoided an all-out collapse of confidence in its ability to pay back its debt. But things can change, and fast, fast. Indeed, the Greek debt crises went from ignorable wire stories to front-page news in a matter of days. I don't know how many times I've said on this channel about debt, how it's guaranteed, and how you don't get this information within the mainstream media, and because of this, they make it sound like it's something that can be defeated simply by paying it back. The math doesn't allow it. If we had a gold standard and I lent out, or a bank lent me, say, 3 ounces of gold, and I have to pay back 5% that year, then I could get I can mine some gold to pay the interest, and thus debt would not be guaranteed. But because of monopolization of the money system, it's guaranteed. And the final one, debt finally catches up to us. And as I've been saying, it's guaranteed. So it's almost like saying, oh, what happens if the sun's going to rise in the morning? Well, it's guaranteed. Obviously, you know when the sun's going to rise. You may not know when the debt's going to catch up. Because, well, they say interest rates on the U.S. debt are low today for one big reason. Investors trust the United States, at least more than they trust other countries. And that's very interesting how they put at least more. It's like if there's 20 people that you don't trust, that are the most untrustworthy people, and you take the most trustworthy of those 20, then hypothetically you could say that they trust them more than those other people. And why are the investors trusting them? Because they're conditioned to. That's, once again, my personal opinion. If the people giving us money suddenly have little faith in America as Americans, that could change, and quickly. I wonder if it will. I want to go over one more little point again, where they say most signs point to a slow and steady recovery. What do you think? I mean, seriously. I look at the signs of the 2012 prophecies, and what I see it as, it's their religion, and within their religion, they don't want to look at anything that may seem pessimistic, and that thus they block it away. So there's no reason to look at the 2012 issue, no reason to look at the Ron Paul activism issues, no reason to look at any of these documentaries that are explaining what's going on, no need to look at the people that are struggling through debt right now. So if you throw those signs away, maybe we might have a steady recovery.